Hey guys, welcome back. I'm Jeb Smith, Coldwell Banker Residential Brokerage here in Huntington Beach, California. And today I'm addressing the question of, are there property taxes when you sell a property? And so it all depends on what type of property you're selling and how much equity you've gained in a certain period of time, whether or not you're going to pay taxes on that property when you sell it. So I'm going to give a couple of examples to help guide you through this process and hopefully make it a little bit easier. So, for topic of conversation for the video, we're going to have your primary residence and we're going to have an investment property, right? So we're going to talk about an investment property first because it's a little easier to address. So when selling an investment property, if you sell that property and you have a gain on it, there are essentially capital gains you'll pay on the equity that you've gained in that property. Unless, of course, that you do a 1031 tax exchange where you take that gain, that equity that you've made on that property, and roll it into another property of higher value, of like kind, etc. So I'll link to what a 1031 is below to give you better guidance on a 1031 to help, kind of guide you through that process if you're not familiar with it. But with 1031s, you're more likely to pay tax on it if you're not rolling it into something else than you are, say, a primary residence. So for now, we're going to talk about primary residences, and a primary residence for topic, again, for this video, we're going to say is something that you've lived in 2 of the last 5 years. So if you've lived in a property 2 of the last 5 years, it's been your primary residence for that period of time, then in the state of California, you have a capital gain exemption when you sell that property. And I'll link to capital gain video again below to give you more information on what capital gains are, if you're not familiar with capital gains, but to help guide you through that process as well. But for a primary residence, if you're an individual and you've lived in that property 2 of the last 5 years, and we're going to assume that you haven't sold another primary residence within the last 2 years, because if you've sold a property within the last 2 years, then essentially if you go to sell another primary residence, there could be potential tax consequences associated with that. But if you've lived in this property, you haven't sold one in the last 2 years, and this is your primary residence, as an individual, you have up to $250,000 that is tax-free. It's exemption on capital gains that you can't be taxed on that $250,000. And if you're married, that goes up to $500,000. So you have up to $500,000 that is tax-free on the sell of your property. So an example would be if you bought a property for, say, $400,000. And let's say now it's worth $1 million. You've lived there for 2 of the last 5 years. When you go to sell that property, and let's assume you're married, you're going to have $500,000 that is tax-free. So you bought it for $400,000. You sell it for, say, $1 million. So that $400,000 to $900,000 is $500,000 in gain that you can walk away tax-free. That additional $100,000 is there's some potential tax consequences there, right? But keep in mind, you can write off realtor commissions. You can write off, there's certain expenses that you can write off, home improvements that you've done to the property. Those are things that you can write off when selling that property. So out of that additional $100,000 that you have there may be less than that you'll actually write off based on the things that I just mentioned. Now keep in mind, I'm not a tax accountant, as you probably know. I'm not a CPA by any means. So if you're going to sell your property, you have tax questions, consult a professional in that field because they can guide you through the process. There'll be a better, there'll be someone better to talk to with regards to your tax questions and really give you the guidance that you need versus, say, a real estate agent just kind of talking off the cuff about the subject. So don't rely on my information. Consult a tax accountant if you are considering selling your property and you have tax questions. So that, I hope that it's helpful in kind of giving you the difference in the two and telling you whether or not there are actually tax consequences, because it's not as cut and dry as just saying, hey, yes, there are, or no, there aren't. I would say in the majority of cases where it's your primary residence, at least in my experience, there are less taxes associated with that sell than, say, with an investment property when you go to sell that property. Now, keep in mind, if you have an investment property and has been an investment property, if you move into that investment property for 2 years, then you can actually say that's your primary residence, and then that could be a sale of a primary residence and you could get that capital gain exemption. So there are ways to kind of work around there when you have an investment property and so on and so forth. But if you have additional questions about selling a property, taxes, 1031 tax exchanges, capital gains, any of that stuff, do me a favor, comment below. Would love to address them. As always, I appreciate you taking the time to watch, and we'll see you again soon. Have a great day. Bye-bye.